Good afternoon. This is Deborah Pratt Johnson Burns, and I am delighted to see you this afternoon. I am here with Audrey Lansing Burns. She is my co-host today, and we're going to be talking about bankable revenue in all market conditions. And specifically, we're going to be talking today about dividend income and how to build a dividend portfolio. So I'm going to take you through that very specifically. And Audrey will be asking the questions and I will be expanding on each of them. So thank you very much for joining, and I'm going to let Audrey take it away. Thank you, Audrey.
Awesome. Thank you so much for having me. I really appreciate it. It's a pleasure to be here. I'm really curious, actually, Deborah, you've been doing this for a long time. At what age did you actually start investing?
So I had the good fortune of having a mom who was very instrumental in my investing career, so to speak. She was a private investor in a very strange time in the world when women were not doing things like that. They were raising children and keeping the house. But my mom was a maverick, so she had gone to business school, and she ended up giving me stock, particularly Citicorp stock, for my high school graduation gift. Said, learn everything you can about the stock market. This is your ticket to freedom. So I love that. Didn't love it at the time because I was hoping for the car or the vacation, but I thank her now. So
Right.
Yeah, so I'd say 18 fairly. I opened a brokerage account and began investing in earnest.
Interesting. So at 18, was that the first time that your mom ever mentioned finance to you or the stock market, or was it maybe earlier? I'm not.
Well, here's what's interesting. Because of the nature of my mother and who she was as a person and a businesswoman, I was recently talking to a childhood friend of mine who lived next door, and she and I were great pals and did a lot together, and she was over at my house a lot. And she reminded me recently, she said, Deb, do you realize that your mother started calling us into her office to talk at the tender age of 7 about stocks? And I thought, I didn't really remember that, but I'm glad that you do. And thank you for mentioning it. So yeah, mom has been trying to educate me at a very early age about stocks. And I thank her to this moment for it, because it is who I am today. I mean, and she was very instrumental in building and crafting who I am today.
Wow, that's interesting. That's a very good story. That's an awesome start. So I know that you got these stocks at age 18 or after graduation, but when did you actually really get started in investing since this was your first time, what steps should first time investors or investors with limited knowledge and experience take?
Right. So I think the most important thing is to determine, what are you investing for? So what are your short-term goals and what are your long-term goals? So for instance, I was working as a babysitter in my teens, and I was also a catering manager. I also had my own specialty bread baking business called Deborah's Harvest Breads. So I was saving all of that money for whatever things I wanted. I was very much into amateur photography, and I invested in my first Nikon, SLR camera, which at the time was probably $1,000, which is a fortune at that time. And that was my immediate goal. I wanted to really get into photography professionally. So I decided that instead of putting my money in a savings account, that I would actually put it in an investing brokerage account so I could make my money grow faster. So I suggest to people to determine not only their goals, short and long term. So is it a Nikon camera? Is it a house you're going to buy? Right. What are the things that matter to you as a person, and for that matter, to your significant other, should you have one, or partner or whatever. Together, what does that mean to you? So I opened a brokerage account at Charles Schwab. There are many brokerage houses these days, TD Ameritrade, obviously, Robinhood, among others, E-Trade. And just open the brokerage account and put a significant amount of money in there. Start with ideally $1,000. And in that way, you can really invest in a meaningful way. And anything smaller is a little tricky because stocks are expensive, and it's going to be hard for you to build momentum with such a little amount of cash. So if you can start with 1,000, terrific. If you can start with 500, terrific. Anything less is a little bit tricky.
Yeah, right. Okay. Okay. Interesting. Cool. Thank you, Deborah. I'm actually a little new to this myself. So could you maybe just expand upon what is actually a brokerage account?
Sure. So basically, there are companies like Charles Schwab, as I mentioned, TD Ameritrade, E-Trade, and Robinhood. They actually facilitate the platform that you and I, as investors, can go into on our phone or on our laptops or on our tablets and actually trade stocks on the New York Stock Exchange, the American Stock Exchange, or any stock exchange you wish to trade on. But those are basically the major two stock exchanges. And it allows you, they are tremendous resource and research tools. So they offer the investor of every age and every capability research, which is key. So they give you not only the stock categories, for instance, mutual funds, fixed income, which are bonds, and there's all different types of bonds. Primarily today, we're talking about stocks. Okay, which means it's a percentage or share of a company that you own. And they in turn will reward you for being one of their shareholders by paying you for investing in their company in the form of dividends and capital gains.
Oh.
So that's hopefully helpful.
Yes, no, that's extremely helpful. Thank you. Now I kind of want to get started. I want to go into it myself. How do I, get started with this, creating my first portfolio?
Okay, so the most important thing you can do is, again, back to the goals. Think about what you want to invest in. So do you like technology? Do you like consumer products? Do you like healthcare? Do you like banks? It's really what really turns you on, but also more importantly, what the industry is saying in terms of the strength of the sector. So Wall Street Journal, Barron's, Seeking Alpha, Investopedia, CNBC Pro, there are a number of resources that you can actually refer to determine, what are the types of companies I want to invest in. And as I alluded to earlier, I invested in blue chip stocks, which are stocks that have been around for generations, that probably as long as the market's been open for 100 years. And these are companies that are very robust and very strong and consistently growing. They're not fly by night. They're not speculative. They've got very strong balance sheets, very strong financials. They're not going anywhere, and they're not going to cut their dividends either. And we'll get into that a little bit later. So hopefully you'll be investing in blue chip stock companies in any one of the sectors that I mentioned. But you have to do your research first. Money's money, and it's hard to come by, and it's hard earned, right? And by the way, I might add, you do not want to put your money in a savings account because of the very one reason is all about the thing called inflation. Now, recently, inflation was pegged at 6%, which is pretty outrageous, which means the value of the dollar significantly decreased, and the amount of goods and services the dollar can buy significantly decreased. So your money is not worth as much. So you have to maximize your money and maximize your returns. So what that means is that you actually want to buy into companies and become a shareholder in companies that actually pay you handsomely in dividends. You have to beat inflation. So any dividends below 6% right now, and in a standard normal situation, which the market is never normal and neither is the world, but we used to have 3%. That's normally what it used to be. But I think in this day and age, you've got to find stocks that yield beyond 6%. That's not easy to find. So that's why you have to do your research. And again, to your point, create a watch list. Now, in the whether you have an Android or an iPhone, there is a stock app, and it looks like this.
Yeah.
You can see that? Okay. Maybe you can't see it so well, but there it is.
No, yeah, I recognize it.
You got it. And as you'll see, this is my watch list. Okay. But this watch list goes on and on and on forever, because
Yeah.
I'm researching a lot of companies and I research them over time before I put even a dime into the
Right.
market. Again, for the very reasons they're hard-earned money and I don't want to screw around, because it's a serious, investing is a serious thing. So that's important, to put together the watch list, determine your goals, determine the types of companies you want to invest in. And then we're going to get to, what's your time horizon? Do you need money in the next year? Do you need money in the next 5 years or in the next 10 years? So I work with a lot of millennials and Gen Z and Gen X and all sorts of young people, as well as, people who are in their 50s and 60s who are planning the other end of their lives.
Right.
And I basically say, please do your best to be serious about your research. Make sure your watch list is fluid, meaning sectors change, industries change. Read the newspapers, online, whatever you can get your hands on, and do your research and cross-reference some of the things some of the experts are saying, because you need to make the decision about what works for you. You don't want them to make that decision for you.
Right. Interesting. That's good.
Yeah.
I appreciate that. That's really good advice. Yeah, because I feel like it can be easy to just kind of go into it and read something and say, oh, they're doing this, I'm going to do it. Like you said,
Exactly.
things change, so you have to be aware of multiple sectors at all times. That's good. So I am wondering, I'm curious about, I like this idea of dividends. What are kind of my options here when I get a dividend?
Right. So basically how you build a income stock portfolio is as follows. As I'd mentioned before, you're a shareholder of a company. So they're paying you in dividends quarterly, every 3 months. And when you look on the stock platform, whether it be in Schwab, where you have your money housed at Schwab or TD Ameritrade or E-Trade or Robinhood or many others for that matter, but those are the big ones. And you're a self-directed investor, keeping in mind, you're not hiring anybody to do this, you're doing this yourself. That you create that portfolio, you put that $1,000 in, and then you take that watch list and pick, let's say you pick the top 5, okay? Then the next level of research is, oh, okay, what are the dividend payouts of the companies that I like? And then you might be sort of sad, because then you might find out, hey, I love this company, but the dividend payout is just horrific.
Right.
So do I really want to stick with this company, or do I go back to my watch list and pick companies that maybe have a higher dividend, right? So you have to pick and choose, as I said, the ones that are higher than 6% because of inflation right now, and they're few and far between. So the way to find those out, and my secret is, and have been using for quite some time now, it is a website called Sure Dividend, SURE dividend.com. And basically that company, as well as many others in the industry, but that one in particular I like because they keep it simple. Investing is complex. Let's keep it simple here and let's really streamline it. So I go in there and I find out, okay, cool. So what are the dividends that are paying, what are the companies, excuse me, that are paying higher dividends, right? And they will tell you this because they actually grade them. So you have things like dividend kings is what they're called. Now, these dividend companies have actually been paying out dividends to their shareholders consistently, never cutting the dividend, no matter if there's a recession, if there's an inflation, no matter what. They have strong balance sheets. They have strong financials. They are not going to screw with your financials and your dividends, and they're going to pay them consistently for a period of 50 years or more. Those are called dividend kings. You want to hang out with the kings. That's a fact. You want to look at all the companies that are paying out. There aren't many, because 50 years is a long time, right?
Yeah.
The next one, the next category is called dividend aristocrats or champions. So those companies are similar in nature in that they're traded on the S&P, which is the Standard & Poor's 500 index. They're traded on the New York Stock Exchange or the American Stock Exchange, but mostly NYSE. And they've been paying out dividends for 25 consecutive years. And they've been paying them out consecutively every quarter, and they keep rising. So not only are they paying dividends, the dividends keep going up and up and up. So you're just totally psyched about that. And then the other company types, as the three categories, are the dividend contenders. Now, those companies are a little bit younger. They haven't been around as long in the market history, and they've been paying, they're excellent stocks too, no doubt, but they've only been paying between 10 and 24 years consecutively of rising dividends.
Right.
So what I'm saying to you is, if you want to play with the big boys and really make some serious money, you're going to want to invest in the kings. That's a fact. They are various prices. They are various types of companies from various types of sectors, but you're going to be making over 6%. One example of that is AT&T. Now, AT&T is maybe $24 a share. I didn't look today about what it is, but basically it's very cheap. And the dividend is over 8%. So that's very attractive.
Yeah.
And you've got, which it's up to you ethically, whether you want to invest in these types of companies or not. I'm not judging anybody, but that's just your call and your choice. Typically, tobacco companies are paying 8 to 10%, like RJ Reynolds and things like that. Other high dividend yield companies are sector like oil. So for instance, oil and gas, which you may have been reading, is flying right now, because that's why our prices are so incredibly high. And their dividends are like Exxon, Mobil, and Chevron. I mean, they're kings for sure. They've been paying out over 50 years consecutively, and their dividends are, somewhere in the neighborhood of 6 to 8.
Wow.
So, but here's one thing that's very important here that I really want to mention. It's like anything else: high risk, high reward. Keep in mind that some of these sectors are very volatile. So right now we're like in glory land and oil's doing great. But talk to me next February when oil may not be doing so great and the dividends could be potentially cut. Well, if you're relying on that income, that wouldn't be so good. So think about that also in terms of sectors when you are investing. Even though they're high flyers and big payers, it doesn't mean they always will be. So you must be on top of this, and you must be able to really understand the nature of investing and the nature of business. That's really important.
Wow, interesting. Okay, that's a very good point, and something to keep in mind, especially when you are looking to these big names and you think they're giving such dividends, I should invest, and then all of a sudden they could cut at any moment because they're very volatile. So you're right, keep a watch list even after you invest.
Well, that's excellent point. Thank you for mentioning that, because my watch list constantly changes. And actually, the good news about this stock app is that you can actually move the sectors. So whatever, let's say I've got 50 on my watch list, I can actually edit and move them up and down on the watch list based on where that sector is this week, for instance.
Okay.
So all my oil is at the top of my list right now because they're paying beautifully. Right now, tech is not doing so great. So tech just took, second seat, third seat, fourth seat on my list. But that may change. So then oil goes down and then that pops back up. So I think my point is you have to be on top of this. And this is your hard-earned money. The other thing to also understand is that there are two things that are critically important in dividend investing. One is, what is the X date? Which means you have to be a shareholder of record before the X date. So for instance, Chevron's X date is coming up. I think it's around December 10th or so. I happen to be an investor in that as well as many other things, but the point is I'm particularly keen on that date. So I have to be able to hold the stock by or on that date in order to actually receive the dividend on the pay date. So if, for instance, I'm trading in and out of stocks and I'm not paying attention and I'm making profit and getting in and out, we don't typically do that, but I'm just saying some people do. Sometimes you buy and hold, which is the best way to invest. And sometimes you're a day or week trader or a month trader and you're in and out of stocks because you're playing the cycle, right? So I do both, and we do both. So the X date, for instance, I wouldn't want to miss that X date because I've been holding it for so long and then all of a sudden I missed the dividend. I would be very mad, So you also have to keep like a little chart, not a big deal, keep a little chart of what's the X date and what's the pay date. Okay. I think the other thing to keep in mind too, and this is a choice you make when you're on the platform of, let's say, Schwab, which is my platform, you go in and choose, do I want to reinvest that dividend? So let's say, for instance, a stock paid 10% dividend and you've invested X amount and maybe you're making a couple $100, whatever it might be. You can choose to reinvest that cash that you would have gotten and buy more of that stock. So that's one option. Or you can reinvest yourself and use the cash to buy other stocks. So you have a choice. And that's the beauty of being in the market. You always have a choice on whether you want to reinvest dividends or to buy more and amass your fortune or not. That's a choice you get to make. You also, by the way, get to cash out these dividends at any time you want. Doesn't mean you're not going to get back in the game and make more, but maybe there's a short-term goal that you have money for, that you made profit from these companies in dividends, that you want to buy that camera or buy the bike or go on a vacation. Keep in mind that then is a taxable event. What that means is it is added to your income, into the income bracket you actually are in. So most people making between, I don't know, I think it's up to 82,000 or something like that. I'm pretty sure that's what the 2022 tax brackets say. Your tax is 22%. Anything over 82,000, it goes to 30% and so forth. I have a post on my social media as well as on my website on the new tax brackets. So take a look at those brackets to determine, can I afford to take all this profit? It might, jump you into a whole different tax bracket, and then you're paying more money.
Right.
I don't think you want to do that. So to recap, this is an important initiative as an investor. You make serious amounts of money, not only in the growth of the stock, but also in the dividend. And as a believer in multiple revenue streams, whether it be from your companies that you own, from your employer, it's important to really keep track of everything you're doing, because the very nature of the market and the stock market is driven by world affairs. You got to be on top of this stuff. You just, and that's why a lot of people, I'm sorry to say, in the world think they want to be day traders or week traders or month traders or buy and hold traders. They don't do the work. So they're not really ever successful. And all I can say is, you do the work, you're going to be wildly successful, and you will continue to be wildly successful if you're diligent. And that's what's important here, is diligence, so hopefully that's helpful.
That's very helpful. Thank you.
Any other questions, concerns, anything else you want to talk about with regard to dividend investing?
Yeah, I think maybe I just maybe had a quick question, kind of about, you're talking about how there are day traders that come in and out. I know on the rise is this new thing called like cryptocurrency. Can you explain that a little bit?
Well, I can't even tell you on two hands how many young people have actually asked me, and for that matter, many people, forget about being young, everybody's asking me about, are you investing in crypto? And it is considered a speculative investment, like getting involved in IPOs of companies, initial public offerings. So it's in that category of speculative investing. What that means is that you may make a tremendous amount of money if you know what you're doing. However, most people unfortunately aren't educated in cryptocurrency trading. So they not only are losing money, but they're really jeopardizing their future. And that concerns me greatly. So unless you're being trained by a professional who has a track record in investing in crypto, I wouldn't touch it. It's too speculative. There's too much risk involved, and the return on investment could be very high, but luck is not an investment strategy. So when people make fortunes in crypto, they're like, hey, look what I did. Isn't this great? Well, maybe you had some good fortune and maybe you have a great teacher, but only the people that are not only professional crypto traders, but are very, very educated, very highly educated, in the nature of cryptocurrency, those people are successful. The rest of us need a mentor or a teacher to take us through exactly how that works. It's not for the faint of heart.
Right.
And by the way, keep in mind with all stock investing, there's a phrase they say in the industry, yesterday's wins are not necessarily today's. So you can't bank on what happened yesterday and your trades and your successes today. Past performance is no guarantee of future results. As a fact, it just is. And the other thing I will leave you with today, which is critically important and very, very hard not to do, emotion has no place in finance. You must leave your emotions and your ego at the door. If you do not, you will emotionally trade, which a lot of people do, and I've been guilty of it myself. I try not to be, though, because I'm not interested in losses. I'm only interested in winning here. So we all make mistakes. We're all human, but this is hard-earned money, and this is serious business. So I highly recommend, if you're going to make a trade, either in or out, do the research, do the research, do the research, and trust and stay in the game. I've heard of too many people see stocks going down, and even though they're dividend players, they think, oh my God, the stock's going down. Oh my God, the stock's going down. It's emotional. It's emotional. And then they're done. They're gone. They're out of the game because they're trading on emotion that does not serve anyone ever. So please don't do that.
Yeah.
Right. That's really my best advice here.
No, that's very good advice. And I appreciate that at the end, because I feel like that's a very good point to land on. I do think a lot of people with everything tend to let our emotions get the best of us. And I think that especially with things as serious as, like you've said, your hard-earned money, it's important to really be strategic and think about your actions and not make impulsive decisions.
That's exactly right. So the way to win in market trading and in any market condition is twofold. One is the research. I'm happy to share with you all of my resources because there's few. One of which is Seeking Alpha. You can get a subscription to that. That's for professional traders. The other is Tip Ranks, which are hundreds of thousands of stock analysts. You can get their research and they're aggregated. So you can go in and say, look, I want to know about this one stock. What do these guys who are on the street say, or professional traders for major, investment management houses. So those two, Seeking Alpha, Tip Ranks, brilliant resources. I adore them and I rely on them. Believe me. That's two. The second ones, which are important, but not as important, they're important from an economic and what's going on in global finance. Wall Street Journal, number one. Barron's, close second. Okay. CNBC Pro, close third. Entrepreneur, interestingly enough, close fourth. I read and work with all of those on a daily basis. So I need to be on top of all of that news so I understand what are the trends, what are the cycles. And one last thing, at the bottom of a page on your platform, on any one of the trading platforms you happen to sign on to, it will show you which sectors have been the hottest sectors in the market that day, that week, that month. So if you're beginning to see a trend, for example, oil was very hot recently for the past, I'd say since August till probably last week, or maybe the week before, and then it went off a cliff. So you better know to get the hell out of oil before it goes off the cliff, and then watch it to get back in. Same with tech. Tech went off a cliff. Well, I don't want to be there. No, thank you. Get out, and then wait and get back in. Now that's for professional traders. I don't highly recommend that to anybody. Typically, you're going to have to ride the highs and ride the lows as a long-term investor. You don't pay attention to that stuff. You just invest in the right companies and you win over time. That's called a buy and hold investor. As I said, I'm both. But I don't recommend, getting in and out because you don't really know exactly what you're doing. And or you may or may not, but it's tricky business. I've been doing this for 40 years. So I sort of know. I'm still learning and always learning, but I don't want to recommend anything to somebody I wouldn't do myself.
Right. That I feel like that's good advice.
Yeah, thank you. So this has been tremendously insightful. Hopefully it's helped you. Hopefully it's
Yeah.
helped our viewers. I'm excited about this topic. I think it's a big deal no matter what age you are, because I've always been told by my mentors that the most important thing you can do is have multiple revenue streams, no matter where they're coming from. So
Right.
if you can run concurrent revenue streams, you're going to meet your goals and live prosperously much faster than your peers, because you're not relying on one income source, which is fantastic. And then I just want to share also that on December 1st, my tax strategist and strategic partner, John Heo, is going to be talking about what the new tax laws for 2022 are and how they're going to affect our personal finance and our bottom line, as well as our business finance and bottom line. So he's an expert. He's going to be talking about that on December 1st at 5:30. So tune in. It's on my website, literacytolegacymentors.net events, and you can sign up in RSVP and you'll get the link and the all the information you need. And then December 15th, my attorney colleague, he's my strategic partner, Fred Valachi, he's going to be talking about estate planning and maximizing your assets at year end. So that's on December 15th at 5:30. So I hope that you can join us for my financial freedom education series. I hope you'll learn an enormous amount, and that to your success is what I want to say. Have at it. Go
I
for
love
it.
that. That's a great attitude to have, especially in this really serious industry. You want to bring a little fun to it and really with a go
Absolutely,
getting it.
absolutely. And if you're not having fun, what's the point?
That's true.
Seriously. And just know that I'm all about empowering others to learn, to trust their instincts, to trust their actions, and to give themselves permission to thrive. And that's what I'm all about. So I hope to see you again, and I hope
Yes.
we can do this another time in the future. And I thank you so much for being here today.
I thank you for having me. I really learned a lot. Thank you so much.
Absolutely. Take care and happy Thanksgiving.
Oh, thank you. Happy Thanksgiving to you as well.
All right. Bye-bye.
Bye.